Hi there, Justin Keane, Director at BetterCo. Welcome to my next edition of Chats with JK. I'm pleased to have with me today Sarah Bloxham of Let's Talk Mortgages and Insurance. How are you, Sarah?
I'm great, thanks for asking me over today.
No problem at all. Now, today, before I get into asking you a little bit about yourself and what you do, we're going to be talking about the AIM tax system, which might sound pretty dry, but hopefully we'll make it a little bit exciting.
Well, you and I are interesting, we'll make it exciting.
Oh, I think so. Now look, I've known you, Sarah, now I looked it up this morning. I think it's, 10 years or
I think
more?
we passed that, it might be 12 or 13.
12 or 13 years. So you've been a client of mine for a very long time, and I see you more as a friend now. You were the celebrant at my sister's wedding, which is amazing.
A long time ago.
Yeah, that's it. But I suppose to start, Sarah, do you want to tell us a little bit about your background, what you do, and the business that you're in?
Yep. So my business is called Let's Talk Mortgages and Insurance. Previously an ex-IT manager since IT was invented, so I'm big on technology and everything that helps any business get better, and listening to better processes, etc. After finishing being an IT manager, I had a property management business for 3 years, started that and sold it, and then decided I'd love finance, so got into mortgages. So this business, Let's Talk Mortgages and Insurance, which I love with a passion, has been going since 2015.
Yes, and who's your ideal client? Who do you deal with mostly?
My passion is first-time buyers, and I've got lots of hashtags I put everywhere, and it's definitely Kiwis getting into homes, really big time.
Yeah, and was that from day one that was your target, or did that sort of develop over time?
I think that was my target. I just wanted to make a difference. I really wanted, if you could get into a home and you're growing an asset and riding out the waves of up or down, it's just a great thing for Kiwis to not to be renting anymore.
Yeah, great. And you must have, since 2015, you must have seen a whole lot of success stories. A lot of happy people getting into homes.
Yeah, and interest rates change up and down and up and down, and really teaching people that what you're signing up for today is not going to be the same next year.
So just to delve into that a little bit deeper, how do you help these people specifically get into their own homes? And I suppose it must be different now than it was 2 or 3 years ago, just with this environment.
I think I really teach people, and I'm a lot all over social media like yourselves at BetterCo, it's definitely about putting yourself out there, is teaching people to talk to our mortgage advisor, hopefully me, and then and to look at your numbers now. Can you do something now, or do you need to change something? Because sometimes it's not, here are all your numbers, oh, if we get rid of this bit of debt, we can then do better, or can we save a bit of deposit and then have 20%, not 10, and maybe not get fees and better interest rates. But also teaching people that what I'm telling you today can also change in 3 months. So I really reiterate, today the test rate for this bank is, and they're all words that people might not know, but I also teach them, please know I'm in the mortgage forest, as I call it. I'm here to teach you a bit. You'll never understand that. And that's probably one of our standard jokes. So do you remember, so our joke every year is, Sarah, Justin, you say this to me, and you say this. Sarah, do you know every year you ask me the same thing about your accounts? And I go, yes, Justin. And when I don't ask you the same question, you've got to be worried.
Yeah, totally.
Yeah, and this is what I tell self-employed people as well. When you're to trust an accountant to be there to guide you, because you're good at your business or job, and then you're good at what you do, and we don't need to know everything. We've got to have some trust in the process.
Totally. And I think the people out there will understand why you're called Let's Talk.
Oh, hey, look, it's all about communication. And I know you're funny, because you and me are funny, but if I see lots of people post, oh, I can't get hold of my mortgage advisor, or how do I do this? And part of ours is that I do lots of Zoom meetings along the way. It's not just getting you, Justin, and your wife for pre-approval and leaving you to go off into the sunset to buy a house. You're actually having a Zoom, how to do it, pre-approval, how to buy session, how to fill in a sales and purchase agreement. So along the way you learn and get to the end process.
Yeah, totally.
You know, the end step.
Yeah, so communication is key for you guys.
I think, yes, 100%.
And also I've just heard there is, it's an education process.
Yeah, which is exciting,
along
right?
The way. Yeah, which is great. Okay, so let's dive into the AIM tax system. Now, I introduced you to this, I don't know, maybe 3-4 years ago.
Yeah, I don't
so
actually
the AIM
know
system, I had to look it up this morning because we only know it as the AIM system, and it's the accounting income method.
I wonder what it stood for. No, because I just believe the acronym of AIM. So what does it stand for?
Accounting income method. Okay, so the way that the AIM system works is that, and we'll delve into how you guys are using it very well, is that you pay tax as you go based on how you're trading. You know, that's pretty much the crux of it. And it's It's not provisional tax where you base it on the previous year plus 5% divided by 3. It's based on, look, if you've got choppy trade or you're a growing business, it really helps your cash flow because you're paying tax. If you have a good couple of months, you're paying more tax, and if you have a down couple of months, you may pay less or none at all. So it works really well for our client base at the minute. We've got about, I think, 50 or 60 clients on it now, and you being one of them. So I suppose to start with, how has it helped you from the beginning? Or do you want to start with how I convinced you to go on to AIM?
How did you tell me, how did you convince, I think what happened, was it to do with when all of a sudden my business was growing and you went, Sarah, I think we need to change something? Yeah, was that probably the line?
It totally was. And you were skeptical,
yes,
because it was a new system for you and you were unsure. But I think I did a pretty good job.
Yeah, I did the trusting.
Yeah, you did. But I think I did a pretty good job in convincing you, because you were growing pretty fast at the time, that this was for you, because we didn't want to have a calculation based on something that we didn't know was going to happen.
And my business was going, whoa.
Yeah, it was. Yep. So I don't know, tell me how it works for you now with your internal team. Like you've got Helena there that does quite a lot, but how does it work for you at the minute?
So my business is very process oriented, and that probably goes back to being an IT manager where everything is process driven and your end goal getting a person to get the keys to the front door. So all the way along, if you then put that into your finances, it's mostly Helena as well, because I love Xero, and I've been in Xero since the beginning of time. So we, reconcile our Xero every single morning. So Helena does it every single morning so that it's done.
That's great.
It's much better. And then in the business, we have a meeting on a Monday, which isn't so much about finances, but on a Friday morning, we always meet and we look back at the week. We talk about clients, but we're looking at what incomes come into the business. And then we're running a report that you helped us set up. Thank you very much. We run that report, and every Friday morning we're putting, we've got about 5 separate bank accounts now. We're putting aside the tax every single Friday.
That's great.
So that means that then I know what's left in the business to spend that I can draw, etc. But it then means when we come to the end, so everything for me is 2 months.
Yes.
So the GST is 2 months, AIM is 2 months, and if you think, I think 1st of September will be another June and July, June and July, 1st of August will be it, is that right?
Yeah, correct.
Yep. So June and July, those 2 months, start of August, we'll do a GST return. Yes. You guys email us and say, hey, do it. We reply back by like the 2nd of the month, because we'd boom straight onto it, because it's already reconciled. We are pretty quick,
Yeah, I'm going to cut you off there, because you are quite unique in that regard, let's be honest, because not only do you reconcile daily, but when it comes to the end of the 2-month period, so it is June, July, it's literally a day after that everything's reconciled, your GST return is ready to be filed, and you tell us, please prepare the AIM return.
Yeah.
And then Jacinta within the team will prepare the AIM return, and that comes back within a day or two as well.
Yep, she's pretty quick,
Yeah, which is good. And then I suppose at that point, you get a total of the amount that needs to be paid.
Yeah, we get
for
a really
that
nice
trade.
Yeah, we get a nice email from you guys, which is nicely laid out to check it, and I go, yep, and then we look at what's in the bank account, and it's very on par relative to the GST as well. And it means by about day 3 or 4 into the new month, the GST's paid, AIM's paid, and the holding account for tax is back to zero, and off we go again for another 2 months.
Yeah, totally. So it works really well.
Yeah, and just why it works really well is because I'm not holding tax for a whole year thinking, crikey, have we got enough saved? It's done at the time.
Yeah, and it's transparent.
Oh, that's a good word.
You might have a good sort of savings account that's set aside all of that, but you don't really know whether it's the right amount. So at least every couple of months, you know, as you say, you clear it out of that holding account. So your GST is taken care of. Your income tax through AIM has been taken care of as well.
Yep.
Has there been any instances where it's been out by too much?
No.
Not for a while?
No, and I think that's because that report really helps.
Yeah.
And because we at the same every Friday, Helena runs a GST report, like at the minute we're in credit because I've just done some travel to a conference. She go, oh, the GST's in credit for 1,300. The AIM's got to have this much in the account. I'll look in the account and go, hey, we need to send 3 over there. She goes, do you want to make it less to the GST? And I go, nah, because I know by the end of the month we'll have some income come in, so we don't worry about that.
Yes.
And then we just move the money across every month, and it's non-touchable. I know that's not not a correct word, but it's just an account you don't touch. It doesn't matter what the business is doing, the tax, and it's so cool, and it's very weird that I get excited about it. I've never got excited about something relative to tax, but it just feels so good paying it.
Yes.
And the account's gone again, and you're keeping everybody happy, which means you and IRD really. If I keep you happy, it's a good thing, right?
It's a peace of mind thing.
Yeah,
right?
yeah.
And I suppose for us as well, when it comes to the end of the financial year.
Easy.
We know that, and I'll touch on some of maybe the adjustments that Jacinta puts through every couple of months, but there's depreciation that she'll run, there'll be a home office estimation that she'll put through. So when it comes to filing the AIM return, it's pretty close.
Yep.
And the proof is in the pudding when we do your year-end financials.
Yes, there's not much wash up.
Yeah, there's not much wash up. There might be a little bit of a refund, maybe a tiny bit to pay, but it's pretty much
I think there was seriously about $11 or $50 or something tiny.
Oh, look at that.
It was teeny tiny.
Yeah.
Which is good also for me, because you don't go, oh, I might get a big refund. I don't want a big refund. I just want to pay it every 2 months and then be on track. But it also sets me goals for previous years that Helena and I look back and go, okay, where were you 1st of August last year? Were we on track for the same amount of income? So on that Friday, we run about 4 different reports from zero. And the first one we look at is the tax, because I do find it boring, which is no surprise. And then we just look at that, then we look at other stuff. But it is very good to compare your year on year back.
Yeah, totally.
Did you know I did that?
Yeah, I know you've told me before.
Oh,
yeah, so that's really good. So I suppose just to sort of summarise that for people that are maybe looking to take on AIM as a new system, it helps because, as I said right at the beginning, it's based on how you trade.
Yeah.
So it's if you have a good couple of months, then you pay more tax. But if you're a fast-growing business, it's better to front-foot it and to pay that tax while you're trading very well. And if it comes off, then you don't have to pay as much, or you can. You probably didn't know this, but if you've overpaid your tax, you can actually get it back as well.
Oh, imagine getting the tax back.
Yeah, because it's on par for that 2-month period.
Yeah. So it probably is over 3 years I've been doing it now, because I remember I jumped hugely from 1 year to another year, and then a really big jump. And if I hadn't put that tax aside, something you and I were talking about off camera before earlier, I would have had to probably get a personal loan or a loan against my house, because the tax would have been that massive that I wouldn't have put aside.
Yeah, that's right. You probably would have spent it.
Yeah, I would have spent it because I wouldn't have known that I need to put. And so this number one with a growing business is really good, but also this 2 months I've got a slightly quiet August for winter, just slightly quieter. So I know that as we're putting aside every Friday, it doesn't matter. And then she's August, September onwards, it's just again. So it is very relative for people to get their tax paid but earlier and done.
Yes.
Not the provisional tax side.
No, and
I would not like to go back, just saying. Let's keep the AIM side.
Yeah, well, let's just hope that the idea continue that on.
Yes.
That's good. So I think that sort of covers off the AIM. I think it's been very positive for you and your business.
It has, and please know that, if any of your people coming to you want to talk about, they're very welcome to contact me via you. But just to say, hey, what do you think about it? How easy or hard it is?
We can share this video now.
We can share this video, but sometimes people want to talk, but it's your team, e.g. Jacinta, and that being quick as well.
Yes.
There's no waiting. It just goes in, out, and then I focus on my business, not on focusing on accounting.
Yeah, well, just on that, I think maybe some of our clients can take a leaf out of your book and maybe get everything reconciled very quickly, you know, and just have everything up to date so we can.
If you do it daily, it's only a little bit compared to. I don't think Helena would like to be doing it weekly because it would be way too complicated.
Some businesses do it every time they do the GST return, every couple of months.
I think that would take longer rather than just doing it every day.
Yeah, totally agree. Yeah, so to finish off, Sarah, I just wanted to maybe pick your brain on a general overview of the current market out there at the moment. What are you sort of seeing? We're in this recession. Do you want to give some guidance of what you're seeing with your customers that you're dealing with at the moment?
So we'll talk about first-home buyers because they're probably 98% of my client base and people coming into the business. Everything's about a plan. That's one of my keywords all over social media. Make the plan, look at what it is now. Can we do something? Don't think that the interest rates are going to be the same. Please know the market, the economists, and there was an economist talking for ANZ, finishing just as I left to come to this meeting, talking about it. And they're all guessing that in a year time the rates are going to go down.
Gazing, aren't they?
Oh, 100%. Yeah. So, if you're getting loans, we talk about breaking it really in the minute, maybe into 1 and a 2 year. Not guessing just 1, not guessing 2. But please know that every single client is different. So don't believe on social media that a person can buy a house in Auckland as a single person on low income. They will have got a lot of chunk of money from somewhere else. Yep. And that you're all very individual with regards to your debt, your assets, your children, your daycare maybe, and that everyone needs spoken to differently. Yes. It's not quiet out there. If a person is keen to buy, I've got people that are moving around New Zealand so they can buy a house in case lots more people work from home now, or employers are more open to them working for somewhere to buy a home. but you've still got to have your friends around you, you know,
Yeah.
so it is a bigger story.
So I think, yeah, plan still.
Plan and then get into it. Don't feel, oh, I might wait 2 years till the rates go down, because then the house prices are going to go back up again and you're hitting that. But only do it when you're ready, not because it's FOMO. You don't want this fear of missing out at all. You want to do it when you're ready. Yeah.
Excellent. I think we'll leave it there. That was great,
Awesome.
Sarah.
It was lovely to talk to you.
Yeah, thanks for coming in. And I look forward to speaking with you in the future as well.
Awesome. And we'll always be keeping in touch, Justin.
Definitely.
Especially every 2 months.
Let's talk.
Yeah, that was good. Let's talk. Thanks so much.
Cool.